Here to help us put all of today's news on the economy and the markets into context is Joe Davis. He's chief economist at Vanguard. Joe, always nice to have you on the program.
Likewise. Thank you, Susie.
I want to pick up where Michelle just left off. She said that 3% rate is saying that the U.S. economy is doing better. Is it really, looking at today's jobs numbers, is that reflective of how the economy is really doing it, or the other numbers that we get, like on housing or auto sales, that seem to be a lot stronger? How are we doing?
Well, we're certainly doing better in our judgment than where the U.S. economy was, say, 2 years ago. Housing, as you mentioned, Susie, is a clear example, has clearly rebounded. Consumer balance sheets are stronger. Business investment is higher today than it was 2 years ago. So despite the disappointing news today in the jobs report, it wasn't dismal. And I think the higher interest rates that we're seeing are reflective of a somewhat firmer economy.
But, Joe, do you expect rates to continue to rise? I mean, is 3% a cap on the upside, or are you looking for significantly higher rates down the road?
No, well, I think if we're bold enough to look out for at least a year, I think it's tough to envision the 10-year Treasury, which was mentioned in your report, markedly above 3%. And why that is, I think if you start to talk about higher interest rate levels, you are in a world where the Federal Reserve is raising short-term interest rates. Mm-hmm. And I think it's very likely that they're on hold at least through middle of 2015.
The other issue that everybody's been talking about, as you know, is about Syria, and a lot of concerns that one way or another we're going to get involved as a country over there in Syria. Can the U.S. economy handle it? I mean, at this fragile state that we're in right now?
Well, I think we can handle it in terms of what is believed to occur. I think, though, however, it will only be able to withstand the impact based upon if it's a limited armed conflict. In other words, the damage to the financial markets and to investment confidence will be commensurate with how spread any sort of scenario would unfold in the Middle East. So I think at present level of oil prices, we're okay. But if we would start to see oil prices, as just an example, $120 a barrel or higher, then I think we would start to see estimates for economic growth for the later this year really come down.
So how do you invest against that kind of a backdrop that you just set up for us so nicely, Joe? Do you still continue to put money in fixed income investments, and if so, of what duration, or do you favor stocks?
Well, I think, again, you have to first, the key areas around balance, and then it's focusing on what the investor or what the viewer may be trying to achieve. I mean, this has been a long tested just message from Vanguard of, have equities, generally speaking, in your portfolio for long-term growth potential, and you have fixed income to moderate equity volatility, which we had during the day today, as well as to potentially provide some income stream. But, as the previous report mentioned, I think the near-term focus on just yield in a rising rate environment like we saw the past several months will underscore that switching from, say, dividend-paying stocks to fixed income, these are inherently different investments. And so investors need to keep that in mind if they're going to make or contemplating large changes to their portfolio.
So we can't put you on the spot here. Vanguard has fixed income funds and it has stock equity funds. Which way should an investor go? Go with which fund in Vanguard?
Well, I mean, that is very difficult to tell. And there are the reasons, Susie, is depend upon you or I's risk tolerance and what we're trying to achieve. I think for conservative investors, fixed income, a broad portfolio of fixed income investments, whether they're taxable or municipal, is a fantastic opportunity for long-term investors. And then for those that have a more aggressive or moderate objective, then equities will remain the place to be. And again, regardless of the investor's profile, they have to look through the volatility, which we saw even today, to ultimately achieve the objectives in their portfolio.
Okay. I know it's unfair to ask an economist those kinds of questions, but thanks for going along with it. Thanks a lot, Joe. Have a great weekend. Joe Davis, chief economist at Vanguard.